Hello and welcome to my daily review. Well, today's headline is that IT sector bailed out the market today. Surprising? Well, yes. And let's look at what happened in the market. Well, first of all, the market started with a terrible gap down today because over the weekend there was a massive escalation in the crisis in the geopolitics in the Iran war with a lot of attacks and counterattacks. Brent crude thus rising about 3.5% to almost at 79, causing the rupee to weaken by about 28 basis points to end at 95.62. So this meant that I think FIS started selling India today, and the market then recovered later in the day due to two or three reasons. First is that the results of the rest of the IT pack. Right, I'll discuss this in detail a bit later. But before that, I wanted to point out that the indices finally unusually ended flat without any much difference. Nifty was flat at 0.02. Mid cap was point at 0.01%. Small cap at 0.03. Only micro caps were up about 13 basis points. So an incredibly flat. And if you look at a flat line like an ECG monitor, where the line is flat means the market is dead, but far from it. It was a very active churned market, and right time wise churn from morning to evening and sector wise churn, right? And this meant that the oil price hike affected the inflation figures because not only is the Brent crude indicating a spike in imported inflation for the RBI, but food inflation, which was released today from a macro data perspective, showed a spike June over May. So the June retail inflation accelerated to 4.38%, it's above the RBI's comfort zone of 4 from 3.93 in May. And what is important is that it was food inflation which drove it, because I don't know whether the bad monsoon in June or it was also the spilled down effect of the oil prices and the LPG prices in terms of the food products sold in restaurants and hotel chains. All of this comes under the food part. And rural inflation was slightly higher than urban inflation. So this was not a good trend. So naturally, FMCG was one of the worst performing sectors today. Another macro data which got released today, which didn't help the cause, was that exports drop in the year-on-year basis by from 43 billion down to 40 billion, and the trade deficit widened to 30 billion, 59% up year-on-year. So clearly, imports didn't fall, didn't increase that much, but exports fell sharply from 40 to, as I said, 45 to 40 billion. So that is another data. Now we come to the fact of what happened with the flows today. FIIs back to their normal. I saw all the newspapers and WhatsApp headlines in every social media saying FIIs are now turned buyers, they are all coming back, the mood has changed, blah, blah, blah. Probably FIIs heard them and said, hold on, boys, cool down. And today they sold 3,000 crores. And DIS tried their best to support, but like I said, it's the early part of the earnings season. DIS are not going to reveal their hand and completely commit the cash, though mutual fund inflows were actually 25% higher month on month to the fund managers. They got a lot more money, but they bought only 2,000 crores. What about the needy players? How do you judge them? Well, funnily enough, microcap was the marginally an outperformer. Advanced decline ratio was flat, 1500 is to 1400, right? And the VIX actually spiked 8%. So I'm not sure how big a role that needy played, and I'll come back to why I say that. Is that because the prime mover today in terms of the market was the IT sector. Because what was worst off today was FMCG was down 1%, defense was down about 0.5%, metals were down about 70 basis points, right? But in terms of the winning sectors, right, IT was 3.6% up today. The next highest sector to do better was consumer durable with 1%, and auto is the next with only 45 basis points. Clearly, IT dominated. So, what is the impact of IT, and why did IT, increase today? Well, 3-4 things there. There was one result which got published today, which was LTIMindtree, which was positive and good. There's one result which came just out of market closing, which was HCL Tech, which is again very good. And more importantly, there were some further post-earnings announcements by TCS. I'll dwell a little bit into this in a bit more detail. Just hear me out now, right? So HCL reported a 20% year-on-year rise in profits. Now, obviously, this came just out of market, but market got a sense because the stock rose very high today. So the market got a feeler, I think, that it's going to show. So it beat the estimates, and sales, that is revenue, grew 14%, and operating margin improved to 16.9% despite they had a one-time restructuring cost, right? So, and they have retained their guidance. Like I said, this earnings season is all about the guidance. HCL retained the guidance. So that was the good news. Second thing there was that in terms of LTI, how did LTI do? LTIMindtree also reported very positive growth numbers. And both these companies, the important point there was the fact that they showed a lot of AI focus in their earnings talk, right? In terms of the restructuring, again, tie up with Claude and all to retrain their engineers. And they said that, I think HCL said that their AI little business was growing 62% higher compared to last year. So I think that AI related positive stock is also as equally important as the earnings and the guidance, right? Then second is TCS. Now you come to TCS, the first thing they did was they restructured a lot of their employment in terms of the leadership roles, split a lot of this in order to give a pure complete focus to AI. So again, even an employee restructuring was labeled as an AI, which is what the market wants to hear and was glad to hear. But apart from that, they also announced a landmark multi-million-dollar AI driven, software as a service, right? SaaS. But this was network as a service, NAS deal with Asia Brown Brewery, the big MNC, ABB, the European MNC, to overall ABB's complete network operation. So that is a huge win for TCS, and that was reported. So TCS actually, if you see on Friday when they reported the result, the IT index started doing well, but TCS stock didn't do much on Friday. But today the TCS stock bounced as this information also came in. So these were the things which were driving the IT services index number. And just to let you know that this, if I did a back of the envelope calculation and said, what if IT index was flat today? And as mentioned, what would have happened to the various indices? Now, various indices are different components of IT in them. Obviously, large cap has the largest share of IT, right? Followed by mid cap, followed by small cap, followed by micro cap. So whatever it is, if all the IT stocks had remained flat today, the Nifty from being flat would be down 50 basis points today. Mid cap index from being almost flat would have been down 27 basis points. And small cap index was about 3 basis points up, would have been down 18 basis points. Only micro cap from its 13 basis positive would have ended flat. So today's index has to thank the IT sector for helping it to keep heads head above water. That's why I said today IT bailed out the index today, right? So in fact, my suspicion, and I have no evidence to prove what I'm saying, is that in the morning when FIS sold, they sold much more than the 3,000 crore net. They probably sold 5 or 6,000 crores. But as this IT news flew in, I'm sure that they would have stepped in and bought during the day, maybe another 1,000, 1,500, 2,000 crores. So they ended up at 3,000 crores. So what I want to say is the market started down and finished on a high, which gives a very good setting for tomorrow. That if the market closes on a high and nothing else on geopolitics comes and disturbs the play, until the next IT bellwethers report and everything, market is likely to continue on a stable higher mode for tomorrow. So that's the good news which I feel to close today's discussion. Look forward to catching up tomorrow again. Thank you.